Candle range theory trader back with you with another video on is this candle range theory model the silver bullet killer? So let's not waste time and get into it. What this video is going to cover is how this single candle range theory setup can be the ICT silver bullet upgrade killer, however you want to put it. If you don't know what the silver bullet model is, you can look it up on your own time. That's really not what I'm trying to get into here. But what we're going to go through here is some entry criteria, some chart examples, and a bonus example, singular, not plural, showing you how you can use that model to upgrade and employ it into the candle range theory. So let's take a look. There is a new way to frame your own silver bullet trading technology using the candle range theory. This simple way to frame a silver bullet trading system, the way you're going to do that is you only need four things. The first thing you're going to need is an ATR, or average true range, candle range. Okay. And if you don't know what I'm talking about, you need to pause this video and go down to the description and take a look at what is the ATR candle. You need to look at that to understand what range we're talking about. I use the 4-hour chart though for these examples. So most of the charts I'm going to show you are 4 hours unless I specify otherwise. Next, you're going to need a set trading schedule or set hours. So I only trade between, X and X. So between, say 4 to 9, I only trade between 1 and 5 p.m. or whatever, whatever your schedule allows. You're going to need an entry setup on the lower time frame, and then you're going to need a profit target and also a stop loss. So you should know all of these pre-planned before you go into it. So one example of such plan is this. So let's say you're going to look for an ATR candle range at 1 a.m. Okay, on the 4-hour chart. So when you put your cursor over the 1 a.m. time frame, you want to see a ATR candle, and I'll show you this. So just be patient. Next, you'll say, okay, after that, between 5 and 9, that's when I'm trading. All these times are Eastern Standard. I'm on Eastern Standard Time in the U.S. Okay, whatever yours are, you got to figure that out. Next, your entry time frame, your lower time frame. So for the sake of this example, I'm going to use the 15-minute chart. And your goal is to say once price pokes above or below your range, your ATR range, and then closes back inside of it, that's your entry signal, and that's it. You don't need any indicators for this. This is strictly price action once a range is defined. And then lastly, after that, you just need your take profit and your stop loss. Your take profit is going to be the bottom of the range if you're short, or the top of the range if you're long. And then your stop loss is just going to be above or below the range. By how many pips, you may wonder, that's up to you and whatever your account size can handle. So how does that look? Let's say this is the basic model for a short. I only did the short because for a long example, you just flip it. Okay, we're all intelligent here. We know how these things work. So this yellow candle, for the sake of this example, is going to be a short example. Okay, so let's say at 1 a.m., by the time you come to the chart, this is already formed. So with your trading hours being from 5 to 9, when you come to the chart at 5, you should already see a candle that looks like this. This is a candle range that has exceeded the average true range. The line that you see there is simply the price action or the candles that you're expecting to see. You wouldn't even necessarily need a candlestick chart for this. You can use a line chart. Who cares? But the main part you're looking at is when price pokes above the candle range high and then closes back inside of it, you enter there, no questions asked, and your stop loss goes above the high. Your take profit is the low. Done. You are finished. It is over. Now, the caveat to that is this. If this does not happen by 9 a.m., for the sake of this model, you are not trading. You're not going to give it another hour, another 2 hours. No. Okay? It's no different than working a job. And if it doesn't work, it doesn't work. Now, a bonus tip for this is if you have TradingView, just set a price alert for when price hits the top of your range, okay? And then set another price alert if price closes back inside of it. So you don't have to sit in front of the charts all day, okay? You can set it up where it'll text you or send it to your phone. You can look up how to do that. So if you stick to a silver bullet model or in trading hours, you're going to be much more likely to be successful because you know what you're looking for day by day. So I'm not going to call it a silver bullet because I'm not trying to copy ICT or anything like that. So we'll just call this a platinum edge. The name doesn't matter, but let's go to the charts now and find our platinum edge. So here's a short example of what I've just showed you. Okay, so let's say we come to the chart around 4:30, 4:45 a.m., okay? It doesn't matter. And our first step is step number 1. We need to see a 1 a.m. ATR candle. Again, if you don't know what I'm talking about, you need to look at the video in the description titled ATR candle. What is that? Okay. You'll understand that and the indicator you need for that. Okay. So that's it. So once you have that, you label the top of the range and the bottom of the range. Your trading time frame is from 5 a.m. to 9 a.m. It's a 4-hour window because remember, I use the 4-hour chart. Okay. So next, we drop down to the 15-minute. This is a 15-minute chart. So at 5:15 a.m., we see right here, okay, right here, that where that red arrow is, that is the point where a little wick poked above the range and closed back inside of it. That is all I'm looking for. Do not complicate your entries, okay? This is it. That's all you need to see to go short because the range has been rated, has been poked above and closed beneath. I don't care if you get stopped out. You will get stopped out from time to time using this, but guess what else? Your losses should be small because you're straight trading at the extremes of the range. And if price is going to continue to go up, it's probably going to spike up anyway and take you out. So just set a stop loss, keep it tight, and keep it small so you can take another trade. Do not blow your account trading this. That's inexcusable because you need to be in a position to have margin to take wins like this. All right. So price went down a little bit here, came back up, and then tanked again for 53 pips to the bottom of the range. That is our take profit. That is it. Your entry to your exit. Everything is defined in a set amount of hours. This happened between the hours of 5 a.m. and 9 a.m. Done. Here's a long example. Okay. Here we go. We come to the chart. All right. This is a 4-hour chart. We have a blue. Remember, for the sake of this channel, blue means long. So this is our candle range. So now what do we want to see? Price poke below the range and then close back inside of it. We drop down to 15 minutes. Look here. Price poked below the range. Stayed there a little bit. What do we wait for? We're not trading down here. Do not trade outside of the range. You're going to want to. I'm going to encourage you to not to. Because even if it works, for every one time it'll work, there'll be 2 times that it won't. Your only entry signal is for price to close back inside of the range. Price closed back inside the range on this example. This is euro dollar at 6:30 a.m. That is in our trading window. So we enter right here where this black line is. It says entry. That's here. Okay, stop loss outside of the range. And you'll see here this red line. That's the invalidation zone of the range. Now this one took a little while, so I had to zoom out to get all the candles to show how it progressed. But see how our entry is here. Price went up, came back down. We don't let this scare us, okay? Because we're just outside the range. There may be times you may get stopped out. You know, it is what it is. But guess what price did? It closed back inside the range. Take it again. Who cares? Because if you'd have got stopped out for a small loss here for, let's say, 50 bucks, and then you take it again right here, as long as it's before 9 a.m., okay, for this example, you're still going to get 46 pips. So if you lose 20 pips here, just for example, and then you make 46 pips here, you'll still end the day net positive. That's the point. But you have to be focused on risk management. You don't go all in on every single trade. You are going to be wrong sometimes, and that's okay. All right? But that's a long example. So you have short example right here, long example right here, using the ATR range and this platinum edge model to help you find what you're looking for day by day. And this is it. So your trading hours are set. You're looking for one candle in a 4-hour trading period, and that is it. You do this and you scale up your account, you'll make as much money as you want. But here's some important tips to remember. Number one, if there is no ATR candle, there are no trades. All right. If you come to the chart at 4:45 or whatever, just using for the sake of example, for the sake of this example, if you don't see this candle right here, if you don't see an ATR candle, you are not trading. For my chart, I use black candles just to remind myself, don't trade this. Okay. You're only looking for blues, which is that right here, whether that's a long, see how that went up, and a yellow, which means short. All this I could care less about, other than the only action happens after this. After this is when I start trading, okay? But I'm not trading black ranges. That does not, no. All right, no ATR candle, no trade. That's rule number one. Price must close back inside your range during your trading hours, no exceptions. If you step outside your range, that's on you. All right? You do not get paid to work overtime in Forex. If anything else, if you spend more time in front of the charts, you may make less money. So let's play this out, because remember, let's say your trading hours are from 5 a.m. to 9 a.m. Your trade just doesn't even happen. You have a range like, let's say this, and price just keeps going down from 5 to 9, and there's just no entry. So you'll say, okay, well, I'll wait till 12 and see if it closes back inside the range. And then it does that, and then it keeps going down anyway. Price is not likely to reverse the longer the day goes on. I can promise you that. If it's going to reverse, it's going to reverse typically by, I'd say, maybe 10 at the latest. All right. Because the probability goes down. I've been doing this long enough to know if price is going to reverse, it's typically going to do it by about 10 a.m. If it doesn't do it by then, it's just going to continue going in the same direction it's been going in. All right. Please take that to the bank. So more chart time, make you less money. You got to stick to your hours. So here's a bonus example now. Here's a 5 a.m. platinum edge method. Your ATR range is going to be from 5 a.m. So that means at 5 a.m. you want to see your ATR candle. Your trading hours now are going to be from 9 to 1, and it's still going to be 15 minutes. So here we go. You come to the chart. Here's your short example. All right, short example. So you're looking for a reversal or just a pullback off of this candle range high. This is a 4-hour chart. We drop down to the 15-minute. There we go. At 9:15, okay, at 9:15, price poked above the range, closed back inside of it. That's all you need to see for an entry. A poke above and a close below. You see that, you're in. 85 pip drop to the bottom. Done. Okay, done. A child could trade this. A child. So, in conclusion, this platinum edge can be good for you to just set your work hours and know exactly what you're looking for. This is still the candle range theory. So don't get confused by that when I say terms like silver bullet and all that type of stuff. Those are just terms that people are already familiar with that may be searching for that. And my only goal is to simplify some of these things that you may already have heard of. Okay, but rule number 1, too, is going to be to manage your risk. Okay, you got to manage your risk. Don't go all in. I do teach some high risk strategies, but your risks shouldn't always be the same. You shouldn't always have to risk all of your margin every single time you're trading to try to make some money. As your account count grows, you want to reduce your risk, not increase it. Okay? Be mindful of news during your trading hours. If you trade from, let's say, 5 to 9, that's often time that news comes out around the 8:30 hour for things like non-farm and guys, check Forex Factory for that stuff. And red news, you typically don't want to be in the market during that time frame. Okay, so I want to just give a special heartfelt salute to No Nonsense Forex, because even though I don't agree with all of his philosophies with trading indicators, he was big on creating your own system. Okay. You are free to create your own silver bullet model. If you want to use a 1-hour chart and a 5-minute time frame, that is fine. That is more than fine. You can do that. But the rules have to stay the same. You got a 1-hour ATR candle. That's still rule number 1. When you come to the 1-hour chart, you still have to see an ATR candle. And if you want to drop down to the 5-minute or even the 1-minute, I don't do that. But if you want to, and that's your system, and you back test it and you find that it works, then more power to you. God bless you, and rock out. Okay? And feeling a sense of ownership, you have to feel like whatever you're trading is the best, that nobody can touch it. That doesn't mean you necessarily have to insult other people who don't trade the same as you. At the same time, you have to be confident in what you're doing. Otherwise, you're going to keep looking for new system after new system after new system, and you're just going to copy what someone else is doing. See, everything I've done, I may not be the original creator of it, but I had to put it in a way that made sense to me. I don't expect you to copy what I'm doing word for word, chart for chart. Make it work for you. That way, it is yours. You own it. You're not borrowing it or copying from someone else's, but you have to have that conviction. Otherwise, like I said, copying only gets you so far, and it may take care of you. But most of us who are adults here, we like to have some sense of ownership of what we're doing. And this is just, I've given you a general framework. Tailor it to your style, your personality, your trading style. And I promise the sky is the limit. Once you decide what you want your hours to be, back test it, prove it to yourself that it works, demo trade it a little bit. Once you get confident in it, that's it. You're done. You don't need to look at any more trading videos. Then it's just a matter of saying, okay, how much money can I manage? So I appreciate you watching. Thank you so much for your time and attention. Check out the videos in the description if anything I've said doesn't make sense to you in terms of what the candle range theory is. And feel free to subscribe to the channel, leave a comment. I appreciate any and all feedback. I appreciate you guys for watching, and hope you have a great rest of your day.